Good evening, ladies and gentlemen. This is Real Estate Trading Frank. It's approximately 6:12 p.m. on an absolutely amazing New York City evening on August 6, 2017. Full disclosure, these webinars and these sessions are purely for financial education and not for any solicitation or advice. Session will be recorded and uploaded to the Real Estate Trading YouTube channel that I highly suggest that every single member and free trial subscriber put their subscribe to by just simply putting in their email, and tell everybody that you know to listen to some of these free webinars that I upload and the updates that I do during the week. There's some of the advanced coaching sessions I also very generously, with the permission of the paid students, open up to the general public, and that means to anybody who has access to the internet. Okay, so that they can basically see the value and the power of the things that I try to preach, and more importantly, that I try to teach. Things that I share, things that have made me somewhat successful in what I do, and that's what it's all about. So go tell your friends to go listen to them if they need to, and try to get an understanding of the real facts of the market, not the quote unquote fake facts of the market that you guys are constantly being delivered by other services and the media. Period. All right. So I'll begin, and I'm going to try to use slightly different format tonight to get people, and not people. You guys are traders, okay, and investors. So you're not like normal people. You have to think differently. And the bottom line is that I'm going to start off with some performance numbers, which I never really show. It's all on my Twitter feed, but I copy, and I have a record of every single trade performance that I have delivered. So, and they're pretty staggering. They're pretty staggering. Tell you that. Okay? So, I'm going to start off with showing a couple of numbers, which I think are important, because you guys need to see what you did yourself, and many of you are participating very well, and many of you are not. So you maybe sometimes when you see how much money you left on the table or did not make because you did not decide to take that trade, or bother to look at my charts, or listen to what I was saying on rough days in the market when the room is dead silent. Excellent times to buy, guys. Excellent opportunities. Behavioral finance. Go Google behavioral finance. Go Google life, fear or flight. The difference between clueless trading and any other service out there is we don't fear. We don't run from obstacles, struggles, and storms coming our way. We fight them, and we make them huge opportunities. In fact, our biggest days in the market at Clueless Trading are days when the markets are down 100 points, 200 points, 300 points, sudden flash crashes. And by the end of the afternoon, we are up substantially on a whole bunch of trades. I can't change personality. I can only provide you with the tools. I can change what your behavior risk pattern is, what baggage you carry, who's screaming at you, what demons are in your head. I can't change that. What I can change is share my own experience over many years. And many years ago, I have had losses which are far bigger than some of you will make in your lifetime in income. I am not kidding. I'm not boasting. I'm telling you the truth. Am I proud of it? Absolutely. Because that made me for what I am today. Like they say, there's an old saying, a diamond is shaped out of millions of years of pressure. Okay? Right on the subterranean core of Earth is where diamonds are. That's why frigging diamonds are so expensive. All right? So I am not a diamond, but I do know one thing. That pressure has shaped me to learn what is out there. So if you're scared of losses, and you think, if you're scared of losses, you will never win. And that is the essence of life. So there is no, in the survival of the fittest, there are two instincts in our brain. Very simple: pain and pleasure. If you can't handle pain, you will never get the pleasure. If you can't handle losses, you will never make the large profits. I mean large profits. I'm not talking about token stuff that you make for pennies, which is fine with a lot of you because you guys have real jobs, a lot of you. I don't have a real job. This is my job. So this is my living. This is what I have to pay my nice, and I'm extremely grateful for it, great lifestyle that I have. Not a exaggerated, crazy lifestyle, a good lifestyle. All right? Remember those words, guys, because I'm not Tony Robbins, like I've always said. I'm Clueless A Trading Frank. But everything that I share with you guys is what I practice. So it's not just a bunch of hollow words that I put out there. And people and sometimes I do that in the chat room during the day. And some people are offended. Like I said, grow up. If you don't have a thick skin, if you don't have an alligator skin, don't go hunting. And if you're going hunting, that's trading. So if you got butthurt a little bit because I kind of went hard at somebody on trying to get them more motivated to make more money, well, sorry. But I'm going to do that less because I'm getting a little tired of it, to be honest with you. Because I'm realizing that as a coach that I am, because that's really what I am. I'm not just producing alerts. And by the way, behind you, you actually see the E-mini futures. As you know, that's how we start off our sessions. Okay, which are up roughly half right there. That's the candle. You know, half a handle. That means 0.5. It's up 50 cents. Little candle here. Big volatility cluster. The world's not falling apart. North Korea is not invading Oklahoma. Okay, the Russians are not killing us. So anyway, so that's what you see in the back. So going to my behavioral part, which I just want to get done with because it is extremely important, is the fact, and this, by the way, just so you know what you're looking at, if some people don't know what they're looking at, some of the newer ones might not. These are actual physical trades that we do at Clueless A Trading, guys. Ladies and gentlemen, I should say, guys and girls. This is Goldman Sachs, the 225 calls that I recommended. This third column. This is not what I put in. I didn't put in $4.57 and made $3.98. Okay? This is the actual option price. The August 4th, 225 calls that I kept on saying, telling people to buy. Up 674%. The third column is your ROI percentage. Here's your option price. Here's how much it went up. $4 and let's call it $4.60. It went up $4. So quick question. Let's see how quick you guys are. I know you guys are quick. Of course you guys are smart. So if it was up $3.98, what was the starting price the night before on this 225 call? This is a 1 second answer, guys.
About 50 cents.
Thank you very much. And it took one person to answer that quickly, and the rest of you guys just sat and looked at the numbers. This is the reason why we can cut off every single frigging immigration, every immigrant coming from any part of the world, and we're still going to be stupid jerks because nobody could answer this within 10 seconds. And we keep on blaming the rest of the world for our problems. Our problems are our problems. I have to say it because it amazes me that as options traders, as stock traders, as anybody who's trading the markets, that it takes that long to come up with a simple subtraction that a third grader can do, hopefully. That if something went up $3.98, which is basically $4, rounded off, and it was $4.60, rounded off, that it was originally 60 cents. I gotta say it, guys. I gotta say it. I am a New Yorker, guys, all right? Boston and New York. Guys gotta wake up. And thank you, Jason. And if somebody said there was a mic problem, you know what? Just like the Dems screaming that they lost elections because the Russians came in. Yeah, the Russians did screw around with us. No question about it. Okay? But the election was won fair and squarely. But the bottom line is, can't make excuses. Can't make excuses in this business. Let me move on. Thank you very much. So the first one is the stock price, which is GS, Goldman Sachs. All right, up 580. And I'll show you a whole bunch of this. It's not just the one I'm like cherry picking and saying, oh, Frank's just like cherry picking the one, this and that he talked about. No. There's a lot. My losses are 10% versus 90% of winners. Not fake news, all posted, all there on the real-time Twitter feed. And I like you guys. That's why I'm sitting here on a beautiful evening instead of sitting out on my patio looking out at Statue of Lady Liberty. That's my view. And downtown New York on the water, having a nice glass of red wine, sitting out there with my dogs, with my friends, picking up my wife in 2 hours from the airport. Okay? I don't need to do this. Guys, wake up. If you have math skills which you think you're wrong by, do. Feel free to take your, go online and practice mathematics. Simple mathematics. Forget about percentages. Then people are doomed. And we go around blaming the whole world for our problems. Need to look inside ourselves, guys. As traders, you have to look into yourself. First one is the symbol. This is real kindergarten. Here's your price. Here's how much it went by. Goldman Sachs was up $2.6%. The third column is always the ROI percentage. This is off one of my platforms. Okay, so Goldman Sachs was up 2.6%. The calls, which had literally no time value left, because we were basically buying it sporadically for about 10 days. Okay, or actually less than that. We're up 675%. So if somebody tells me, oh my God, I'm going to sell all the calls or whatever puts because they're expiring the next day, there's so much premium decay and there's so much theta and delta, there's no more value left on the options. Well, this is a prime example of all the garbage that you guys have been taught elsewhere or seen elsewhere. Options can jump up 100, 200% within 24 hours prior to expiry. This is not like a one small thing that's like, oh my God, if I sell it 3 days before, I'm going to retrieve my money. Yeah, it's good to have risk management, maybe roll them out the next week. But the lottos, which were 60 cents, went up 675%. Well, the stock was only, well, in Goldman Sachs case, not really only. It's, that's quite a big move. 2.6%. On a multi-billion-dollar company, it was up 675%. Let's look at Bank of America, which I alerted the day before. Let's look at it. Let's talk about people who make excuses all the time. And I went face to face with some of them, and they respect me. And they told me on the side, yes, you're right. I know I'm right. So let me ask this, and Jason, please, you stay away from this response. It went up 17 cents. What was the close that day before when I alerted these lottos, which were not even Fridays, which were August 11th. I hope you guys know how to read options. 17 means 2017. August 11th. That's why 8/11. And the calls, C is for calls. 25 calls. What were the day before?
6 cents.
Thank you very much. There were 6 cents. At 6 cents, I actually alerted them at 5 cents, guys. You know why I get passionate? Because I care about you guys? No, I don't. Do I like you guys? Absolutely. Do you care about paying my fat bills? No. Do you like me? Sure you do. Guys, I get passionate because it kills me when people make excuses about buying 6-cent lottos. $0.06 lottos. You can buy 100 of them, which is 10,000 shares, okay, at 6 for $600. So let's say, for example, you bought 100 calls the day before for $600. You guys spend more bogus money doing stupid stuff, whatever it is, you know. $600. What would it be the next day? Come on, guys. You're options traders. Think fast. You've got 100 calls at 6 cents. You sell 100 calls at 23 cents, which, by the way, are going higher. So anyway, at 23 cents, how much money did you make?
1,700.
That's Jason. Will you stop answering? I'm serious.
Yeah.
Okay. Somebody else step up and explain to me why he said 1,700. Tim, I know you're wide awake.
He's doing the percentages.
No, he's not doing percentages. He's doing simple math. He's doing simple math. I gotta get less passionate, man. That's why I was a great frigging guy on Wall Street. Because people love my passion. Tim, wake up and smell the coffee. You bought something at 6 cents. It went to 23 cents. You bought 100 contracts. You had to buy at 6 cents. You put down $600. When you sell it at 23 cents, how much do you sell it for?
You're selling it for a 300% gain, roughly.
Oh my God, Tim, I am going to fire you so hard. I'm asking you how much you sold it for in dollar terms. You put $600. You bought 100. You put $600 the day before when I asked alerted people. And I should have never used the word beg. What am I begging you guys for? So that you can make more money? I hate saying that. I don't know why I say that sometimes in the chat room. I begged you guys to buy it. That's terrible. That's a shameful thing. Only person I beg from is God. So you put $600, which is 100 calls. And then we're going to talk about this tonight. How many times we have made big money on lottos, on a lot of stocks, whether it's MRO, which we're going to look at. Because you guys need to be reminded. So you paid 6 cents. This is 6 cents. This is how you write 6 cents in decimal points. Just in case, no offense, man, some of you are a little deficient in math. Okay? So you buy 100 calls at 6 cents. That's $600. Tim, do you get that? 100 calls at 6 cents is $600. Not hard, dude. Okay? You sold those same 100 calls at 23 cents. And please, Jason, don't step in. What you put $600. How much is that $600 worth right now?
Be about 13,800 roughly.
Holy shit, man. You know what? Sorry, man. That's very disappointing. Very disappointing. It's $2,300, dude. Now, the only reason I'm going to give Tim a break, because that's cause for complete deportation. I'm dead serious. She's just, deport you, man. We're trying to deport like smart, intelligent guys coming out of MIT because they don't have a green card. And here we are, all true Americans, and this is the answer that I get. Okay? Let me explain. The only reason I'm going to give Tim a break is because I like him. How in the world are you talking this garbage, dude? Let me explain to you how this works, okay? Just so you understand basic math. And if you're offended, I'm sorry. And I don't give a hoot. Because what I'm going to teach you tonight in simple math is going to help you with your finances throughout your life. Okay? This is the way you calculate. 100 calls is basically, one call is how many shares?
100.
100, correct. So 100 calls is how many shares? I don't want Jason to answer. Jason, you stay away from this. I'm dead serious.
All right.
Tim, I want you to answer. 100 calls is how many shares? One call is 100 shares.
It's going to be 1,000.
Oh, my Lord. 100 times 100 is 1,000? What's 100 times 100?
Sorry about that, 10,000. moving my comma in the wrong place.
Okay, okay. Yeah, you do that, man. We'd be sitting in, our rockets would be going underground. Our planes would be flying underneath, and Wall Street would be down in the frigging, like, some idiot out there, okay? Seriously. This is the simple way you do it in your head. You just add 2 zeros. That's all. It's 10,000, not 100,000. All you do is add 2 zeros. Somebody wants remedial math, by the way. I'm ready to give it. Maybe I'll have my son teach it. In fact, forget it. I'll have an 8th grader teach it. How about that, guys? You feel offended about what I'm saying? You should be offended what kind of answers that I'm getting from guys who want to trade, guys who are making a living, guys who have 401ks, guys whose wives and husbands or whatever, there's no ladies in here today, but the guys whose wives think that they have a smart husband who can't even do math. All you got to do is add 2 zeros. Okay, simple. So 100 calls is basically 10,000 shares. So if you buy some 60 cents, 10,000 shares, okay, you're paying 6 cents for it on 10,000 shares. Let's say, for example, this is the best way I can explain it, okay? I give you a penny stock at 6 cents, and I say, dude, if this stock is going to go up 400% to almost 24 cents, let's call it 24 cents, just for argument's sake. Okay, let me clean this out. Whew. Okay, 100 calls. One call is 100 shares. You guys really need to pay me more to do this stuff. Jeez. Okay, so 100 calls is how many? Tim, you again.
100 calls would be 10,000 shares.
That's correct, sir. That is correct. Thank you. All you got to do is add 2 zeros. So I give you, let's say, forget options. I give you a penny stock, like some guy that big shot guy who's driving a Bentley, and he's driving a Ferrari, LaFerrari, which very few people have. A couple of our buddies have in New York. I mean, here around Jersey and New York. Okay, LaFerrari is like ultimate. And say, hey, listen, buy this stock at 6 cents. You're going to be rich tomorrow because it's going to be 23 cents. 24 cents. You're like, dude, it's going to go from 6 cents to 24 cents. And if you have some brain in your head, it's 4 times more your money, right? Almost 4 times more your money, because 24 divided by 6 is, 4. There's 4 times more your money. You're like, yeah, I'm going to do it. And I'm going to put some money in there. Well, that's what frigging option lawyers that we give. So you you bought 100 calls at 6 cents. How much money did you put in?
Put in $600.
There you got. You're right, sir. Exactly. $600, which I already explained before, but thank you for the right answer. $600. The next day, you're selling those 100 calls at, we'll take an exact price, the 23 cent level, at 23 cents. Right? They've gone up from 6 cents to 23 cents. How much money are you selling it for?
Well, you're making a profit of about $1,800, but you're selling it for $2,300.
Okay, this is the way life works, okay? When I ask a straight question, give me a straight answer. Don't give me that long-winded backside answer. Yes, you're correct, even though you're not correct, okay? I asked you, how much money would you sell it for? So your answer should be, I'm selling it for $2,300. Yes? Am I right, Tim?
You're right.
That's right. That's the way you give the answer. Remember, in trading, the reason I'm making these points is nothing to do with Tim. I know Tim. I like Tim. We've talked personally. We respect each other. That if traders are not focused on the basic stuff, they should never trade. That's it. If you can understand the basic stuff, you will never understand my precision charts that I am delivering big time for big money every day, in between some losses. That's the point that I'm trying to make here, guys. This thing should be like water, like secondary. I know. It's just like it should know like 1 + 1 = 2. That 2 + 2 = 4. Very simple. And it's the same thing with percentages, which I'm not going to get into today because my few brain cells that I have left will be gone. Okay. So yes, you're right. So $2,300 you're selling it for. So your profit is how much? How much did you make?
1,800.
600 to 2,300 is 1,800, Tim? Please. We are wasting other people's time. We're wasting other people's time here, Tim. Respect other people who are here. Is 600 going to 2,300? Is that an 1,800 profit?
No,
What is the profit?
that'd be 17.
Yes, if you can't count your profit, please do not be on my service. If you can't count your money, don't trade. If you can't count your money, be a priest. Be a monk in like Dalai Lama, who actually knows how to count his money. 600 going to 2,300, my friend, is not 1,800. It's 1,700. I think I've said enough. Let's move on. Look at some other stuff here. So let's look at. So we looked at the GABAC call. Let's look at the next number. These were the ones all in 11 for the 24.5 calls. Now, Bank of America only went up 60 cents. That's not only. It went up 2.46%. From a market perspective, that's a big number. 2% higher for Goldman Sachs, for Bank of America. Those are two primary banks that I trade, as you know. That's pretty big. Now, why is it big? Why is 2.5% for a company like Goldman Sachs and Bank of America an important milestone event? Can somebody tell me?
It's showing strength.
No. It's a very, very important concept with options trading. Very important concept. When price line is up 1%, right? It's up a gazillion dollars. It's a law of numbers. If a $20 stock is up 1%, right? How much is it up? If a $20 stock is up 1%, or let's call it 2%, 2%. If a $20 stock is up 2%, one at a time, okay, how much is it up? Because when you guys understand what I'm teaching you right now, you're going to thank me, you're going to thank your children, because you're going to look smart in front of them. I am dead serious. If you think you're offended, you should be grateful I'm teaching you this basic stuff, which nobody bothered in your life to teach you guys. Seriously. If you're $20, and this is all about trading, how you apply it to your life, that's your problem, dude. $20 stock goes up 2%. How much is it up?
40 cents.
Did everyone understand that? Because I got no answer from anybody else, so I'm going to leave that alone. If a $20 stock is up 20%, how much is it up? And Jason, not you, please, again. And this is not a joke what I'm doing. I am teaching remedial math at 6:41 p.m. to people who want to options trade. This is unbelievable, and you guys should be eternally grateful that I'm doing this. I'm dead serious. What is 20? So don't waste my time, please, or waste your time. If a $20 stock goes up 20%, that's a big thing.
That's $4.
$4.
One person at a time. Daryl, if a $20 stock goes up 20%, how much does it go up by?
Goes up by $4 to 24.
Thank you very much. Let's call it $4. Okay? $4. Let's call it $4. Thank you. Jason obviously knows. Mike knows. Tim, you get it? A $20 stock goes up 20%, goes up $4, right?
Got it.
Okay, here's the psychological aspect of it. Nobody frigging gets excited when a $20 stock goes up 2%. When it's up 40 cents, do you jump with joy and move around and twerk and do all kinds of stuff? No. It's nothing that exciting. Yeah, except if it's If it's MRO, where the calls would go from 5 cents to 55 cents on a 2% move on Marathon Oil. But generally speaking, it's called the law of behavioral finance, the law of large numbers. Numbers excite people. Large numbers excite people. What should excite option traders is what?
Large numbers.
No, percentages. Percentages, percentages. Write that down somewhere so I don't have to repeat it every session, which I know I have to. Okay? Percentages. A 2% move on a large stock, like let's say Priceline, which is a $2,000 stock. God bless Priceline. Okay, $2,000 stock. If it goes up 2%, Tim, how much does it go up by? You know, look, let me stop myself for a minute here. We have a range of people here tonight. Okay? We have Daryl, who's a new member. We have Jason, who's a rocket scientist. We have Mike Harrington, who's very experienced. And we have Tim, who's just starting out. But this is pure numbers we're talking about. So when people tell me they want to learn, they better mean it. Like they say, like my first boss said on Wall Street. In fact, my first job at Putnam Investment in Boston said, everybody wants to learn. Everybody wants to be rich. Who wants to put in the work and the hard work, sweat and tears to do it? Nobody. And the few who do it, they are up there. You can't be screaming and shouting at the world because you drank your way into and passed high school and then became doing whatever, some completely menial. Somebody please mute the microphones right now, please. Thank you. And then do a menial job and then scream at the world and say, look at those guys up in New York. Look at those guys in LA. They're a bunch of, absolutely the capitalists. They don't care about us. Well, what the heck were you doing in high school? Smoking a fat reefer? Doing meth? That's the reason why you live in a frigging trailer park, most of them. I'm dead serious. And this is coming from a straight out hardcore Republican guy. All right? You got to work your way up. Stop telling yourself you want to learn, and yet you don't want to put in the grunt work for it. That's the way I live my life, because I wasn't born with a silver spoon in my mouth, guys. Okay? So $2,000 stock Priceline goes up 2%. How much does it go up by?
$40.
$40. Exactly. And if it goes up 20%, which it never does, it will one day. When they split it, it's going to go up 20%. And they will split their stock. How much will it go up by?
400.
This is 40. I hate writing this stuff on this thing. Okay, 40. And it'll go up 400. So nobody gets excited with a 2% move on a $20 stock, which is 40 cents. Some people get excited with a $20 stock going up $4 is a big deal. A $2,000 stock going up 2% only is $40. Everyone's excited. And a $2,000 stock, which never goes up by 20%, by the way, is up 400. It's a law of numbers. It's a law of numbers. So what I'm getting at very simply, as I move along this thing here, instead of teaching remedial math here, is the fact that Bank of America up 2 point, coming back to my original question, and do think before you answer. The problem with the U.S. educational system is, and believe me, I was head of the Parents Teachers Association, one of the best schools in New Jersey, the finest, okay? And I saw how stupid the parents were. Believe me, I saw it firsthand. That's the reason why I'm like I am what I am. And I'm one of the first guys in New Jersey who actually got the coding to be introduced to some of the schools in Jersey. I actually personally wrote to Mark Zuckerberg to put coding as a mandatory requirement in high schools. So I know what I'm doing. So Bank of America goes up 2.4%, and Goldman Sachs goes up 2%. Okay, why is it so important to the markets? Why? It has nothing to do with the stock price, guys. Think and answer. Why is it so important when Goldman Sachs goes up $5? Why is it so important when Apple goes up $2? Why is it so important when Amazon goes up, $10? Or I don't want to give away the answer.
They have large market caps.
Thank
So
you very much. Thank you very much. They are the big behemoths. What carried the Dow up to 22,000? That so-called mom and pops out there who are completely out of the picture, like, oh, that was at 22,000. Oh, yeah, great. They're not even in the market. Yes, they are in the market through their pension funds, the 401ks. Are they actually physically buying stock? No. Market's very dangerous. Market's very dangerous. Okay, all good. Absolutely. Absolutely. So the fact is, they are large capitalization stocks. They are large capitalization stocks. That's the reason why it's so important that large cap stock, what carried the market up to 22,000 over the past 14 days? What was one of the primary stocks that carried it? And Jason, do not answer till the end. Come on, guys. What was one of the stocks that have carried the market? Well, let's put it this way. It's a Dow Jones Industrial stock, which has carried the market up by a good solid 300-400 points over the past couple of weeks.
Apple.
No. Boeing. A stock that we recommended at $186, $190. Boeing alone is one of the biggest components that have driven the market to 22,000. Okay? So, coming back to what Jason pointed out, which I was going to say myself, when you have large capitalization stocks, big companies, and you get a 2% move, that means it's going up by many, many billions of dollars. Do you guys understand that? You guys understand that part, right?
Yes.
Good. That's why you need a headset and a mic, so I get a quicker yes or a no. Billions of dollars. So that's obviously far more important than a puny $100 million, the capitalization of Goldman Sachs, which I don't expect others to know, is $90.51 billion. That's Goldman Sachs alone. So if it goes up by 2%, that's a lot. Right?
Yes.
Exactly. And a puny stock, let's say like, I'm looking for a little small cap stock. That's on my other screen right now. Let's say most of my stocks are like, okay. So let's say talk about another, a recent winner for people who bought it on the IPO. Sheila, you don't have to apologize about joining late. Just join. Okay. Thank you for the apology, but not needed. So this was a stock that I recommended at the onset of the open on biotech, biotech IPO, which was 2 weeks ago at $17.05. And the stock is right now at KALA. That stock right now is at, I have way too many stocks on my screen, is at $20, which itself is a pretty fantastic return on the money. So is up $20. The market cap on this stock is 467 million. And before I go any further, some people are wondering, why isn't it telling us what options to buy? Well, I've told you what options to buy. Let me get into the nitty-gritty of making you understand how options work through the market cap valuations of companies. That's the reason why I'm doing this. While you're watching the world markets, hang around here, doing nothing, which is great. In fact, I'd like it if it opens down here so we could buy it and everyone else in the room can be dead silent. That's the time to buy. You guys know that by now. In fact, that's the most important technical indicator you ever need to know. When the chat room gets completely silent, not a single response to anything, nobody buys my alerts at the tactical lows, that is the time to buy, ladies and gentlemen. That is the time to buy. That's it. So Kala is 467 million. This is 90.5 billion. If somebody asked me to do a quick percentage calculation on that, I would have to think for a few minutes. Okay, so bottom line is, this is it's a $500 million stock. This is $100 billion stock. So $100 billion stock going up by 2.5% is a lot. 1 second. Bear with me 1 second, guys. Sorry about that. You still get junk calls on a Sunday evening. God bless the USA. So you got a 467 million stock. If it goes up by, let's say, even 20%, which KLA already is on the way to doing, right? No question about it. It's up $3. So that means it is already up from the time that I asked you guys to buy it, 17.7%. So let's say it jumps 20% from here. That's a minor impact overall than a 90 billion dollar company going up by 2.5%. So that's the reason why a 2.5% move translated into a 675% lotto gain and a 283% lotto call gain from the day before. Let's move on to look at some other ones. Let's look at Tesla here, up $8.62. Just from, and these numbers are showing from the day before. Okay? From the day before, it was up $9, 39%. Doesn't really, not that exciting for options, but still pretty damn good. Now, before that I say anything, I actually shorted Tesla and made myself about 46% on that short because the stock was down $3 before it ran up $8. And just so you know, these percentages are directly from where it was from the night before, not what it was during the day. Because remember one thing, guys, it did say day before the option was at 4. What happens during markets, especially volatility-driven markets that we deal with? What happens to these options during the day? Jason, stay away. Jason, stay away from it. Somebody else, please answer. Telos, I'm going to ask you to answer. What happens during the day on a $4 call during the volatility moves that generally occur? The first part of the day, that's generally what we've been seeing. And then we get that reversal bounce. And by the end of the day, the markets are here. So what happens to a $4 call? And Telos, can you hear us?
Yeah, those $4 premiums will go down usually in the morning.
That's right. And it's not like it's in the morning, whatever. Just generally speaking, I'm giving you a recent example of what happens. But thank you for actually responding. So they probably go down to 2.
Yeah.
Okay, or not maybe 2, maybe go down to 3. But I'm picking 2 as a simple number. And then by the end of the day, when something like this happens, they are at 9. They're at 8. So I'm not going to go back into dollar cost averaging and all that stuff because I've covered that on my previous video cast. If anybody bothered to listen to it, they'll make more money. If they don't bother to listen to it, they'll be just like any other excuser and complainer like the rest of the world that is. Okay? Dollar cost averaging is critical in volatile markets. You think that you can just buy something at one go and just shoot up? Sure, it happens. We do that quite often. But I would say majority of the time, we buy something, the volatility causes it to go down. We have to cost average down. As long as the charts hold, as long as I'm showing these hammer reversals, double bottom reversals, all kinds of different patterns, which have been clearly explained repeatedly all through the day, throughout my service, as well as my other video casts, then you are going to make a lot of money because you'll buy something here at 4, you'll add more at 2. Your average cost right now is how much?
3.
Thank you very much. And who was that, Jason?
That was Tim.
Excellent, man. You're taking Jason's place. That's what makes me feel good. All right? Excellent. So the bottom line is at 3, and then you're going to sell them at 6. So instead of panicking and losing yourself 50% because of some the emotional trigger that goes through, and believe me, these are not easy markets. That's the reason why my charts are the only crutch that you guys have, because without these charts, first of all, you can't even make money. You will be done. I don't know how these, I've said this a few times, I don't know how these guys out there in different forums and services keep on chasing prices and making money, because prices are moving around beyond monkey on a hot tin roof. They're like a volcanic eruption. They just go up, boom. You got to sell because things are reset, all that good stuff. Technicals get overbought. They start selling within the first 1 minute, and somebody says, oh, this happens every day, so I'm going to buy exactly at 11 a.m. Another stupid stuff that traders, retail traders get into. They think everything's going to be a fixed pattern. It's not. Sometimes the market's going to bottom at 12:30. Sometimes they're going to bottom at 10 o'clock. Sometimes they're going to open down 300, which is the most exciting day to make money, by the way, as long as you have some cash on the side. And your positions that you're on the night before will be way down. You have cash on the side, you cost average down, and you make some serious coin. I mean serious coin. And we have repeatedly shown that. That's called volatility management. That's something you got to do on your own. I have enough videos out there, and there are people who do my advanced coaching sessions. This is a free webinar, but the people who do my advanced coaching sessions, I've taught them. But it doesn't matter how much you teach somebody. They got to practice the trade. Okay? You can't take a guy who joined the, who joined the reserves and make them into a Navy SEAL. In order to become a Navy SEAL, you got to have the mental framework, because they are smart. And I have friends who are in there. Okay? They are smart. They are just dead smart. It's not like some thug who goes out shooting people. These are precision markers, real precision traders. And the real successful Clueless 8 traders are like precision snipers and SEALs. What we are doing in the markets overall is urban combat. Okay? It's hand-to-hand warfare against the algo high-frequency trading programs, guys. If you don't believe it, well, you're seeing it every day. The reason why I'm overall more successful than not successful is because I am hand-to-hand fighting these machines via my tactical charts. I don't expect every one of you guys to be a Navy SEAL or to be in the elite team. Okay? But you guys should be a little bit more smarter than what I see out in the open in the chat room a lot of the times. I see too much emotions at play. Too much like, oh, if this happens, this is going to happen. Yes, great. How about relying on the tactical roadmap of my charts, trying to understand them more and more so that you can take out the enemy, which are the machines, which are the robots, which are the algorithmic high-frequency trading programs that I've been talking about for years, and now every single bozo on the media talks about it, right? Absolutely right. Every other word out of Pisani's mouth or other guy, Santelli's mouth is, oh yeah, the algo programs, the algo program. We've been talking about algo programs for a long time. I have friends who design these algo programs, and they don't even freaking know about the stock markets. They're smart. You put them as traders, they're dead. They just program these machines and let them trade. So guys, the only way you're going to make the real money is you got to understand my tactical charts, because those are not mimicking the algo programs. In most cases, my charts are beating the programs by being one step ahead. And I'm not making up stories. That's a fact. It's a fact. When I'm drawing these patterns, they are so accurate in most cases that if you know how to read these lines, which is not that hard, guys, what you do in your normal life, and I've talked to many of you personally, almost all of you personally, you guys do a much more precise job in dealing with your life, because if you don't, people are dying. So if these lines are so precise that if you just focus on them a little bit more than you are right now, you're going to beat those machines. The hand-to-hand battle, you're going to win. Now, that doesn't mean you have to be a 5-minute trader. I'm not a 5-minute trader. If the machines are moving really fast, okay, 15 minutes, 30 minutes, we're taking down 60%, 70% in this type of move. We're taking down 100% on the put side and the call side. We shorted this. Not from the top. I got it in here. They went from $2.40 to $9, the puts. I believe they were the 24.75s because I saw the breakdown coming. I didn't see anybody else jump on the trade. Maybe one or two people. I don't know what to say. Let's move on. Here's another stock that I've been talking about. It's a swing trade. It is not a day trade. Cara Therapeutics. Next generation opioid, I can never say the word, opioid management, all kinds of stuff. Read up on it. Okay? I don't care what the company, I love the chart. Cara's chart has been posted repeatedly on my Twitter feed. And most importantly on the Twitter feed by now, if you guys don't know, you need to just go, just like Twitter is. This is 2017 after all. Go to the media section, scroll down, all my charts are there. You can look through it. Scroll down as long as you want. I have multiple charts on CARA. 400%. Now, I didn't recommend, I recommended Cara a couple of times because it's a swing trade. Now, 400%, I'm like, is it, and this is for the 18th of August, so you have ample time left. You have 12 days left. The charts are definitely a very bullish engulfing bar. I'm not going to bother showing it because I think you guys should do some homework and just look at it yourself. Okay? 400%. They just sat on it. Now, maybe they fluctuated around, which they did, because Cara went down about $2 before they took off. So if you dollar cost average down, that 400% would be like maybe 1,000%. Went from 30 cents to $1.50. Let's look at this. This is the mild version of this move. These ones that expired on Friday, the day before were earnings on Marathon Oil, which I know some of you were in. They went from 5 cents to 55 cents. Can somebody tell me what a percentage? And Jason, please stay away from this, all right? I'm serious. No, I'm dead serious, okay? Because I'm trying to teach people here. So, something goes from 5 cents to 55 cents, which it did. And this just happened.
1,100%.
Huh?
That's 1,100%, Frank.
Right.
From 5 to 55. Yeah.
That's right. So what is your net profit? This is like the higher level question. If it was up 1,100%, what was your net profit on it? It wasn't 1,100%.
No, it wasn't, because you paid initially for the I call it a nickel or $5 and 50.
Yes, that's
45
right.
cents.
No, so
per contract.
This is
$45 per contract.
No. Now you're getting too complicated because you already have the answer, but you got it too complicated. Is this Daryl that I'm talking to?
Mm-hmm. Yes.
Okay.
Yes,
you're absolutely right. Okay. You got into the right answer, but then you got complicated. So it's almost it's 1,100%. And if every time you let's say the stock was, the options were up 1,100% because they went from 5 cents, okay, to 55 cents, and boy was that beautiful. Yeah. Okay, and believe me, I don't care. This is another thing traders do because they're not in the trade. They don't want to look at it. It's almost like you're in denial. Well, stop being in denial. Even if you're not in the trade, you can at least say, okay, man, I missed that. I did that. Let me look into it. That's the way you think. What traders do, like, they're in complete denial. Fine with me. What do I care? So this is a 50-cent move, okay? So you basically made 50 cents on this trade. Does everyone understand it? Tim, do you understand it?
Yes.
Okay, so it went from 5 cents to 50. You made 50 cents on the trade. So what was it? This was how much the stock went up by, from 5 cents to 55 cents. I'm sorry, the options went up by. So 1,100%. That means your profits were how much? The answer is like staring at you. So please, don't have to get complicated. It's right there staring at you. So your profit percentage, or the way we measure our success, ROI, was how much? The options went up 1,100%. You made a profit of 50 cents. So what was your percentage profit?
That'd be the 1,100.
How the hell is 50 cents to 5 cents 1100, guys?
It's 1,000%.
Thank you very much. I know I'm back to remedial math, just trying to teach you. Thank you very much, sir. Okay? 1,000%. This is the way you guys calculate percentages. Because if you can't calculate percentages, please, do not option trades. Do not just trade options. Just buy my stocks and just don't trade options. For options trading, you gotta know basic percentages. I know all of you do. It's just like unlock it. Unlock your intelligence. Make America intelligent again. We are a great nation, but we are stupid. We are dumbing ourselves down. When the average, and I'm not talking about you guys, when the average trader cannot calculate percentages, and we blame the world for our ills, and we blame because a Chinese kid is the #1 in MIT designing a quantum dynamics like frigging thing that I can't even pronounce a name for. Enough of that garbage. Sick and tired of it. The simplest way to do it is if a $2 stock goes to, let's say, 8. Okay? So that is up 4 times, right? That's simple. 4 times. So that means it is up 400%. This is the simplest way of doing it. All you have to do is always take 100% off it. That's your profit. So in other words, 2 going to 8, your profit is not 400%. Your profit is 300%. I just want to be very, very clear about this. The simple rule of the thumb, just very simple. A 4-year-old can do it. My kid was doing frigging numbers when he was 2 years old. I'm dead serious. But he had the math brain like God knows from where. So 2 to 8 is 400%. But your profits, which I'm going to put as P, is 300%. Am I clear on that? All you have to do is take 100% off the actual number to arrive at your profits. Because originally, as Daryl correctly pointed out, you have to put $2 down to buy that option, correct?
Yeah.
That's right. So $2 down to buy the option. So if it goes to 8, you got to take that $2 down because that's your base capital that you put in. It's real simple. If something is up 1,100%, all you got to do is take 100% off it. That's a standard. That doesn't change. The 100. Take 100 off it, and your profit is then 1,000%. Capiche? All right? That's what you say in New York, Italian. Capiche, all right? You get it? Get it, right? Good. Because I'm not going to spend any more time on remedial math anymore. I'm dead serious, man. Whew. Okay. Let's look at more. That was Kara again as it was moving. These are actual screenshots. Let's look at, that's an actual beautiful chart of that. So let's look at a chart for a quick example as we're going through remedial math charts and options, okay? This is probably one of the most powerful platforms I've ever used, which is the Quad Algo HFT platform, as I like to call it, QUODD. I've been meaning to send a mailing to all my members so they can free trial them and test them out. Okay, this is what it is. When I put white arrows, they're white arrows. That means those are the points where you basically are recommended or you bought or didn't buy, whatever the case may be. But that's a triple bottom. That's a triple bottom. Very powerful pattern. One way or the other, I don't care. The stock's going higher because not only is it a triple bottom, it is actually it's a inverse head and shoulder W formation. Whichever you slice it or dice it, the stock was going to go higher. All of you have to admit, I stuck with the stock even when we had this pullback. Even when I had this pullback, the options were down. Let me take a lighter color here. The options were down. People were just like, I don't know who does what, because one of my goals is going forward, starting tomorrow, is I'm really going to stop pushing people anymore. Because what it's doing, guys, it's taking a lot of real positive energy out of me. I'm going to put in my 2 words. I'm passionate about you guys doing well, really well. But I'm not going to stop pushing people because it's really taking out my solid energy. And I'm the most positive, powerful trader that you, peak performance trader that you can deal with. So with all due respect, I'm going to move away from trying to help people so much during the day. In ACS sessions and stuff, no problem. In these webinar updates, certainly as much as I can. But during the day, I will because it's sapping my positive energy and I don't like it. Because some of you, maybe not maybe guys in here, are just so difficult and stubborn in taking trades on things which are so open, so I'm putting it through so strongly. And then they're pushing forward and I don't get a peep out of them. What do I care? Remember one thing I've said from day one. The pain of regret is so painful. It's far more painful than the pain of minor sacrifice. And that is the ultimate behavioral truth in trading and making real money and in life. I mean it, guys. Only way you will understand sacrifice is through my charts. The pain of rewards are through my charts. There is a limited amount of luck involved. Of course, there is luck involved in the markets. I always say there's at least 20% of any trading paradigm or equation is luck. I'm going to put it as L, well, obviously if I can write this right, is luck. 80% is perseverance. And what is perseverance? That's mental plus tactical. What is tactical? These charts that I post every single day. Mental, that's for you to figure out. I hear guys say, one guy who dropped out, nice guy, I told him, hey, come back whenever. First day he's boasting, I do 200 trades, I'm trading this and that. And the freaking guy, I'm showing like 300% type of returns. I talked to him on the side. I said, what are you doing? Oh, I lost $2,000. And you're doing 200 trades. And he told me he made $160,000 the last week. All liars. Look, traders are the best liars. That's okay. What do I care? But he's talking big on one side. And he lost $2,000. And then he's all depressed. So that's the mental part. You go figure out what your mental tolerance is. Okay? And if you can handle minor losses, or even major losses at times, I handle major losses in certain positions. I turn them around. Why can't you guys do it? And everyone gives an excuse. Oh, I don't have that much money. Like you guys, as if I'm a billionaire. Like, my Saudi uncle sending me like, $10 billion checks every month. Wake up time, guys. All right? Wake up time. Capital is never an excuse to grow. I'm showing 200, 300, 400% type of trades. You need small money to grow big, done the right way, and taking losses along the way. I'm not giving you like 10% movers. When was the last time I was like, oh yeah, I just made you guys 10%. I'm a hero, you see some of the other services. Oh, we made 30% on these options. Oh, whoopee, what should I do? Like jump off? When you're trading options, it's a risk business. You need to get rewarded. The reward should be north of 40, 60, 80, 100, 150, 200%. That is the reward for taking the risk in trading options. Plain and simple. You play options for 10, 20%, unless you're playing with a very large sum of money, it doesn't mean a hell of beans. Waste of your time. Am I clear on that?
Yeah.
On a stock, 10, 20%, beautiful. Beautiful. I show stocks that are up 10, 20%, 30%. Some of these biotech IPOs, which recent things, up nicely. Great. On a stock, it's great. But from an option standpoint, you need to get rewarded for the risk that you're taking. So let's go back to this chart here. So this little drop here, options drop, I remember from 30 cents to 6 cents. I said buy, buy, buy. Nothing changed on this chart. Nothing changed on this chart. The slow stochastics were beautifully moving higher. The fast stochastics were oversold and starting to curl. Nothing had changed. I made it as clear and simple. Very few of you bothered. What do I care? I'm the one who rolled the money in the bank, and some of you guys did too. And God bless you for that. Because this 6 cents here you could have bought, went up to 32 cents here, pulled back to about 20. Then there was a little pullback before earnings. Nothing had changed about the chart, by the way. The overall triple bottom complex head, inverse head and shoulder, which I kept on repeating, was intact. With a red line here saying that this was my critical support. That's where the line was drawn. And guess what? The stock turned exactly at my line. Woo, magic, right? No, not magic. Simple, pure, tactical charting the way I do it. I drew this line here before it touched this line because there was a pivotal support at around 1175. Some of you remember. Stock hit 1177, created another dragon bullish, and see you later. So from here, which was 5 cents, 6 cents, they went to almost 60 cents. 1,000%. I don't know what to say. This is the reason why these charts are so critical, because I don't care whether prices are moving on a certain day, or I do care. Of course I do care, because I'm looking at my P&L. I got like 100, 200 calls on this baby, right? Because of lotto. I know the stock's going higher. I don't know what's going to happen with earnings, but I know my charts are telling me there's a high probability it's moving higher. I'm willing to basically shift out the options for the following week, which I told people, shift them out to August 11th too. And then bang, this happens. And then the stock pulled back after that. Didn't crash and burn, just pulled back a little bit and then started to go higher, because the stock will hit those levels. So I'm not asking you to believe in what I say. Try to understand the charts, do what you guys need to do. Because this stock is a highlight. I'm highlighting Marathon Oil, not because of the 1,000% type of movers, because we've made money on Marathon Oil all the way from here. Is because the reason is, stop always chasing the high priced options. Stop chasing $7, $8, $9, and then they go up to 12. You need to go up to 90 for you to make a $9 option. If a $5 option has to go up to 55 in order for you to make 1,000% on your money. A 5-cent option like Bank of America or Marathon Oil or a few others that I show, but I'm highlighting these two because they have been very relevant to our trading. Going to 55 cents is 1,000% on your money. So why don't traders look at some cheap calls for a change? At least you know what your downside is. 5 cents can only go to zero. $5 can also go to zero. But you have less. You can deploy a similar amount of money here and make a lot more than put big, you're buying 10 calls. Buy 10 calls. Buying 10 calls is, sorry, I'm reading all these texts because my wife's flying back from Canada today. So I'm reading the text. I guess some idiot misplaced her luggage. Talk about another inefficient moron. And hopefully she doesn't miss the flight. Okay, so you buy 10 calls here. That's $5,000. You're looking at $5,000 of money on buying 10 calls when you can buy 100 calls here at 5 cents. How much is that? Quick, guys, quick. And not Jason, you. 100 calls at 5 cents is how much? $500, right? $500. Look at $500. Now, if $500 goes to 55, how much did you make? Which it did, by the way, not if. It did. So $500 going up by 1,000% is how much? What did it go up to? Come on, guys, don't waste my time on an evening like this.
$5 grand.
Thank you very much. Instant answers, please. Make America intelligent again, for God's sake. $500 goes to $5,000. I've been showing these trades repeatedly. Not 1 day, 2 days, like once a year. Publicity is like, whoa, he's beating his chest. He's saying, oh, I took $500 to make 5,000. Guys, I'm not saying you're going to need to go all the way up. But if even $500 goes to $2,000, imagine somebody put $5,000. They are taking out $50,000. And by the way, I do know a few traders who will remain unnamed who did that. They don't even bother wasting time in the chat room. They just follow my alerts like boom. They look at my charts. They're longtime ACS students. They understand how it's going. They don't get all flabbergasted and worried because you get 2 minor red candles in the middle of a nice uptrend where the internals are telling you it's going higher. This was the key for 5,000 to become 50,000. Okay? This was the key. All they had to do, which those people did, was simply follow the slow stochastics. Keep emotions aside. I can say that a zillion times, but it's never going to change some people. I'm not here to change people. I'm just telling you that all they had to do was keep on looking at this, keep on looking at the pattern, and they stuck with it. Is there an element of luck involved? Absolutely. But they had only, but they had put, the bigger guys had put in $5,000 on this MRO trade. And the smaller guys would, let's say, put $500 to $1,000. So the bigger guys who put in 5,000, okay, 5,000. If it goes, I'll cover. I'll take down. Maybe I'll lose $3,000. It's not like the end of the world for a medium-sized trader to lose $5,000. You guys have lost $5,000 for doing the most stupid-ass things ever. For not looking at my charts, for selling at the wrong time, for not buying my tactical alerts. So what are you talking about? $5,000 went to $50,000. You think that's not going to build your confidence? You can put 40 of that on the cash, on your cash money market account, and just trade with 10 and make that 10 go into 30. Do we not do this every week, every month? Or even, let's say, the worst case scenario, you did something, whatever, and the 10 went to 0, you still have your 40 in your pocket. The key thing is it's in the head, but more importantly, the only way you can control your emotions is becoming a little bit more robotic. The only way you can become robotic, it's a flow chart, is by understanding my charts. So let's look at I'm trying to find some let me see here. So here's NVIDIA. Okay. Do I care about NVIDIA? No. Do I think it's a great company? I think so. Big time. Okay. So the bottom line is that what time is it? 7:25. Okay, I'm in time. Okay. This is a solid chart. Solid. Every time NVIDIA does these type of red candle type of moves, it's all within a channel. Now, you could short NVIDIA if you'd like. I don't, because I'm scared of shorting these heavily shorted stocks. But you can trade the channels, you can short them. But what did it do? It stayed within the channel. This was the 3rd, the 4th was a Friday, right? Where did NVIDIA land up? Right here. It did exactly what I said it would do. I even put markers there. It takes a lot of time to construct these charts. And to put markers, that's just for everybody to say, okay, I don't understand anything about technical, but I'll just follow the markers. Just follow the friggin' markers. Seriously, guys. Just follow the markers. Forget about slow stochastics, pivot points, supports, levels. Just follow the markers. How about that? And what did NVIDIA do? The calls went berserk. They went from the Tuesday low of 30 cents to $2.60 on Friday. And again, I hate using that word, but I'll still use it. I begged people to buy the stock when it was down on Tuesday, down at these levels. There was a gap fill, a support level. I showed so many powerful charts on this. It just makes me cry. And I don't cry, okay? It just makes me cry in sadness that so many people, after giving so many powerful trades, just sat aside and threw it away. It's like, guys, people walking up to you and say, hey, dude, here's real money. Here's $1,000. Just take it. No, I can't. I'm so scared. 30 cents went to 260. Let's call it, just for argument's sake, 270. What percentage return was that? And please, I'm
Sorry.
Jason, just stay away, okay? 30 cents going to 270, okay? T-loss, I'm going to pick on, because I'm here to coach, okay? I'm tired of, being like the softie, like always. T-loss, what percentage move is this?
900%.
What is your profit? If you stayed with
800.
this rate. Huh?
800.
That's correct. Does everyone get it? Now, if somebody tells me that, hey, I can't just buy something at 30 cents and let it go to 270, I'm of course going to sell along the way. Of course you will. I'm not saying you won't, but I'm just saying that this is what in reality happened. So let's say you staggered your way. You sold at $1, you sold at $2. You still made, instead of 800%, you still made, let's say, 400%. Who the heck in the world, what service gives you a 400% move over a 72-hour period? I have nothing to say. It's just happening too often. And what's happening too often is I don't want to hear excuses anymore, because I don't care. I really don't care, guys, okay? I like you all. I think you guys are great people, but I really don't care about your excuses, about your mental problems, about your baggage, whether your wife or husband beat you, or whether you were thrown out on the couch to sleep with the cat, whether you were thrown in the garbage can. I don't want to hear it anymore. You want to be a real frigging trader. You got to be a tactical trader. You got to put moderate amounts of money. You don't have to go nuts. You have to follow my charts. You have to deal with volatility. You have to sign up for the advanced coaching sessions to really understand the depth of what's going on. And that's all. Then we have, let's look at another chart of this. Beautiful. Very, very, constructive. I'm looking for some option type of stuff. So show people. I normally make a quick screenshot on a whole bunch of them, and I shall look for one. Bear with me one second, guys. So here was another one from the 26th of July. Okay. These Biogen calls were not, I didn't recommend them at 11. I recommended Biogen at, I got to change this color. I recommended Biogen as a swing trade weeks ago at approximately $276 to $280. Now, this is not a stock that I trade, but look up my Biogen charts. I showed it, and I said it's going to be a swing trade. You're going to stick with it, like Allergan. These are swing trades. These options that are 14 here on this day of July 26th were recommended at approximately 4. Now it's not like a barn burn 1,000%, but 4 to 14, it's still a good solid, 300%, almost 300% plus. Okay, and that took how many days? It took 12 days. It was a swing trade. And Biogen actually after this went up by a little bit more, then pulled back. It doesn't matter. Trade was there. Let's look at Alibaba. This is from the 26th. Okay. Alibaba calls expiring on the 28th, not this week, previous week, were up 272%. Now, point in case, I'm not in Alibaba right now. I'm focusing on NVIDIA's. I'm focusing on the ones, my alerts that are out there right now. I'll get into Alibaba. No rush. Made very decent money on it. Then we have let me look at pull up more what I have here on the screen. That was actually a Russell chart, but let me just okay. Let me do this now. I'm going to. We are at 7:32. 1 second. Close these out because we've gone through quite a few. Okay. Let me just walk you guys through a recent chart, for example. Okay, so here's this one. Very, very important. Going into next week, all right? I've been showing this chart repeatedly for weeks now. But more importantly, I said, if you listen to my last video cast, that this week, this is the only chart you need to follow. How about I put it? Next week, this is the only chart you need to follow. This is clearly defined. There's nothing complicated about it, okay? I have big fat arrows. These are the actual futures. If you want to be a real trader, you got to be looking at the future screen because that's where the kabuki theater really happens. That's where the actors are changing the wardrobe. So if you don't understand what's happening on the future side, and I know I'm real time keeping everyone abreast, so you don't have to do the hard work of the analysis. I'm doing that for you, but you need to understand what I'm putting across. If you don't follow the future stuff and you don't understand what the charts I'm putting out on the futures, please do not trade these type of volatile markets. Please do. Just buy my stocks and sit there. That's it. Okay? The futures markets are extremely volatile right now. They're extremely defined. They're extremely robotic. I have them figured out. Looking at it, I can see what can happen or not happen. Okay? So saying all that, it's very clear. You have a major double bottom here. What time was this posted? That was posted at why is it 8:02? 1 second. I'm on the wrong one. Hold on. Let me pull up one. Let me try to pull up. I actually didn't post that last chart on the ES on Friday because I was too tired. ES reversal. Okay, so here's one, for example, which I use for intraday trading. These are volatility clusters. Okay, hardcore, up and down, all happening within a matter of 15 minutes, 5 minutes, sometimes 3 minutes. This is the big flash crash. Okay, and this was on the 2nd, which was Thursday. Huge buying opportunity. Right here, we shorted puts. I put the 24.75 puts. When I alerted, they were at $2, approximately 240. Big crash, big flash crash, lasted approximately 1 hour. Went to 9. Solid 300% type of move. Beautiful. I wasn't there at 9. I was mostly out at 6 and 7. Saw it plummet down. This is the reality of trading markets. Okay, SPX puts, got 200-300% on it. Big hammer reversal. Candles. I'm just watching the candle dynamics, which reminds me, any of you who are even half serious about doing this business and making any money instead of giving away the money to the markets, have to go back and review the candlestick video that I found and I posted for everyone to see. It is mandatory that every one of you see that. I had the patience to go listen to the whole thing. It's a robotic voice telling you what candles mean. Far better than I can explain to you about candlestick dynamics, and it is not hard. Grab a glass of wine, take on your favorite IPA beer, sit down with a glass of scotch, and whatever you do with a glass of water, with the avocado, I don't care, okay? And listen to that frigging candlestick video. So this happened, not a single peep out of anybody. This is when traders just go complete dark, silent. That's it. They don't want to look at the markets because some positions that they're in are upside down. Okay? So what? So what? It's a process. So either they sell, take a loss, they're looking at the P&L, they're looking to blame me, they're looking to blame the market, they're looking to blame whoever around, right? But they're completely silent. Despair. Markets plummet, 24.76 to 24.63, and it's not even a big frigging crash. It is a crash of roughly 80 points on the Dow. Okay, 80 points on the Dow. Yes, it was fast. Yes, it was furious. That's great. You want crashes to be fast and furious. You don't want crashes to be dragged on for weeks and days and hours, because that is waterboarding. Okay? You know what waterboarding is? You put a towel on somebody's head and you pour a jug of water on it and they think they're drowning. It's all mental. Well, algos are in the business of mentally waterboarding you guys, okay? And retail traders. They put a towel over your head and they pour water. And you think you're 10,000 feet under the water and the sharks are eating you and your brain's getting all screwed up. That's what algos and high frequency trading programs are doing to you. I'm trying to help you, to tell you it's a towel and the guy has a glass of water he's dropping on your head. You're like, if you knew that, then you'd be like getting up and throwing off, hitting the guy and like, what are you doing? Is this a joke? It's no longer waterboarding. It's water fun. Well, stop getting waterboarded by the markets, guys. This is the reality of the business. So what happens? Turns around, we buy the calls at approximately $2-3. They just go berserk. They go to $5. They go to almost $6. Yeah, $6. I remember. You just made yourself 100% of your money, and if you had cost average down here, you probably made yourself 200% plus. But let's say you didn't bother cost averaging down, that you bought my puts. You made a good solid 200% on the way down. And I can't catch some of these moves sometimes. I couldn't catch this one. Am I going to apologize for it? No. I just said I was too fast because we had way too many profits that we had sold. And this was the day before, by the way. Okay? And I didn't get a chance to short the market at this point. And by the time it fell here and started hitting my trend lines, there was a volatility clusters. Never short volatility clusters. They will cluster you. Okay? This is exactly when you hear a lot of retail traders looking to short the market. Well, good luck. I'm not even showing the internals. By then, the internals are deep oversold. I don't short deep oversold markets. I'm sorry. When the bear market comes and the mini bears are roaming, the bear cubs, I will short oversold markets. But not now. Because this ain't a bear market. We still have room to move. Some sectors are way underwater and still have room to move. Such as, can somebody fill in the one that I said is going to be the biggest winner in the next 2 to 3
Small
weeks?
cap. The Russell.
Is this Jason again? Jason,
Yep.
I'm going to just mute you, okay? I want other people to step up.
Sorry, man.
I'm dead serious, okay? This is not like, the small cap market, the Russell 2000. Did anyone else see that on my Twitter post?
Yep.
Well, I hope you guys do for your own benefit, because we're back to that 1392, 1400 level. You get a good, nice 20, 30 point pop for no reason other than a reflex bounce. Will it go back to the highs at 1460 and try to breach 1500 on the Russell 2000? I don't know. If Donald can get his act straight and give us a tax reform, yes, we can. Small caps are the biggest beneficiaries of a strong U.S. economy. That's the reason why they're bumped. That's the reason why the banks bounced. That's the reason why the 10-year government bond deal bounced on Friday. Strong jobs numbers. U.S. economy doesn't care who's in Washington, D.C. They didn't care when Obama was in power. They went up a gazillion percent. They don't care that Trump comes in. Yes, he's got very business-friendly policies. No question about it. But even if he's impeached, thrown out, or if he has a frigging Twitter attack and Melania puts him in the closet, you know what? We're New Yorkers. We know what he is. Okay? You guys out there have no idea what he is. He's not a bad guy. He's just a little cuckoo. Okay? How about that? The point is, he's got a great team around him. So the point is, even if he's pushed away on the side, markets will still go higher. It's all about earnings and economic growth. So, saying all that, is this happen? So let's say you don't want to even swing trade. Just one day alone, you took yourself home some serious bacon right there in your pocket. So guys, I'm going to entertain one or two questions. IWM, let me see. I got to pull it out. Hold on one second, House. He's looking for IWM chart. I know I have it because I posted it. And this was 731. That was a little while ago. So yeah, let me show you a chart from a little while ago, okay? So the IWM chart, this is very defined. Beautiful chart, beautiful, love it. The construction is great. I'm not complimenting myself. I'm just saying the overall construction of this thing here. Here's your support line. Here's your pivot. This was the 31st of July. Perfect line. See how different this platform is? Every single one of these candles is a good 10 to 20% on your money. Okay? Every single one of these candles. You can trade these charts based on my alerts or your own understanding based on my advanced coaching and all that stuff without needing me. Okay, how about that? This is a defined pattern. This is where IWM is going. 144. In the meantime, it can do this. So what? We have major support at this level, and this is the points where we would buy. Look at this beautiful slow stochastic starting to curl. The fast stochastics obviously move faster, but the slow moving like this, slow and steady, is a great sign that the markets for the small cap side are good. Now, this was 731, which was the 31st of July, which I believe was a Thursday. Prior Thursday. No. 31st of July. And 8th was the thing. So this was like 2 weeks ago because we are now on August. I'm sorry, I'm looking at the wrong date. 31st was a Monday. This was the Monday. And this was a Friday. So Monday to Friday, IWM went up to 140.21. 1 second. It pulled back. I don't know what the Friday chart's in me, but this chart is basically designed on on Monday, and these are my targets. And if you just monitor my levels and cost average down at these levels, okay, cost average down at these levels, I believe that you should be. But between Monday and Thursday, I believe I have to update this chart because I think we went down a little bit more. I think we tested this level here. 1 second. We tested this level here. And at this point, it's, in my opinion, based on the RUT chart that I put out there, you guys got to do your homework. Okay, it's all there. That we are in a very sizable. We have a sizable opportunity to make some very decent money with low risk on the downside, and because I play primarily the RUT, the Russell 2000, the big daddy of the IWM. So bottom line is that I believe that we have substantial bounce on the way, and again, we have to deal with the volatility. Any other quick questions that I can answer? Because I think we've covered quite a bit, and it's approaching 8 o'clock, and I got to start bolting. Any other quick questions? I think, like I said.
Nothing here, Frank.
Okay. All right, guys, I'm going to sign off. Just want to leave you guys with this. Clueless trading is designed to make people smarter. It's a well-rounded service which gives you an overall picture of the markets, gives you an understanding of some of the important dynamics of what happens in the markets without having you, like I always say, making you a PhD in macroeconomics. Okay, most of you know sports stats better than you know what the federal deficit and what the difference is between a federal deficit and a fiscal between fiscal and monetary policy. If I asked you guys right now, which I don't have time to do, 99.9% of Americans have no idea what the difference is between fiscal policy and monetary policy. And yet, we like to make big, bold decisions as to whether the world is bad and if people are hurting us and whatever. Because we are truly, when it comes to the financial narrative of things, the most ignorant nation in the world. We are the richest when it comes to overall economy and stuff. But the the masses are so ignorant about basic financial terms. Like when they interview those Super Bowl guys, right before the onset of the Super Bowl, about the CNBC goes there, shoves the mics on, and say, hey, do you know what the Fed is? And the guy comes up with says, oh, you mean the FBI and stuff like that? Okay, and ignorant, and these guys are making $40 million a year. So if that's the way we want to be as traders, Good luck, guys. Okay? Be an intelligent trader. Try to understand my charts as much as possible. They are not that difficult. Okay? Look at other charts that are posted in other places. They are many of them are so complicated, I can't even understand them. And I've said that a zillion times. I try to make mine very simple. There are very defined lines, resistance, support, pivots, the interaction of how they work together. For that, you got to put a few bucks in and take the coaching sessions and learn. On that note, we're going to have a fantastic week. We have a bunch of powerful earnings coming, guys. And like I said, I'm always there to answer questions. But one thing I will remind all of you, do not keep on asking the same question that's already been posted on the real-time Twitter feed. Open your eyes, read. Somebody got offended and said, I read. I said, well, read English. And they said, I was born here. I said, great, whoopee. What am I supposed to do, give you a medal? The guy's really cool, though. He's a good guy, okay? Just happened the other day. Because I already put down in simple English what it is. Just read. Stop repeating and saying, now, if you miss something and ask, that's all fine and good. But I want people to be intelligent. I want you guys to be smart traders. This is a difficult market. And it's going to get far more difficult. And without tactical trading, without tactical charts, without all this algo stuff that I put through, you guys will not make it. And I don't care what the other services say. They are not producing the type of results that we are. Losses can be contained, turned around into profits. As long as you know, and as I keep on showing, where to basically, the couple of things. One is the time management. If you're too short on the time for the week, you've got to roll it over on the options, or you got to cost average down. If you think it's a one-way ticket from buying something and going straight out, how many times have you sold something and it's gone to exactly where I said it was going to go on my charts? I don't need that answer. I know that answer, guys. So look into yourself. Stop being in self-denial. And we're going to have a fantastic time because I'm here to serve you guys and help you make more money and make myself more money. I make mistakes, but at least I admit myself that I make mistakes. Stop making excuses. That's my last word of the day. Have a great evening. God bless the USA. And you know what? We're going to just do fantastic things this week. Have a great evening, guys.
Thanks.